Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and today I'm going to try to do my whole March portfolio recap video without a script just to see if I can save myself some time during editing. This is either going to go very good or very bad, so the only way to find out is to do it. So let's dive into the first slide. All right, so this first slide that we're looking at today, I'm calling this the invested capital versus the account balance chart, I guess. So you guys can see now we're only showing for 2026. So I like to show the last 3 months. What I did last episode was January of 2025. It would have been January of 2026 and then February of 2026. But now we're completed quarter one. We are now in March 2026. So now we have January 26, February 26, and March 26. So you guys can see the blue bars will indicate how much money we have invested in across all of our portfolios. And the orange bars is how much that is worth. And you guys will notice that in January, it went up. The 431 was our account balance. Then February, it was sitting at 434. And here we are at March because March decided to stink. We're at 412. That's right. We lost, what is that? $22,000, give or take. That's pretty cool, I guess. It's going to be great when it comes back, but in the meantime, it does suck. So we don't like that, but I just wanted to share this with you guys. More importantly, you guys can see my blue bar is constantly growing no matter what. We're constantly investing money. So that, like I said before, we're doing what we can. The market sometimes cooperates and sometimes doesn't. So you take what you get. So next up, I want to show you the cash deployed tracker. One thing you're going to notice here, I had 2 days I did not invest. The first one, I'm going to blame on my father-in-law. It's not his fault, but he was in town. I completely forgot. We were actually traveling on the highway. My alarm went off on my phone. I have an alarm set at 2:50, which is 10 minutes before the market closes. And it went off and I was like, oh crap, I forgot to invest. I gave my wife my phone. I put the investment, like I was just going to do one small investment into like VOO in the Roth IRA or something just to like keep the streak going. And I had it set and it looked like it was going to invest, and I thought she clicked submit and I thought I clicked submit and handed it to her to verify or whatever, but it didn't go through. And I was going to be mad and whatever, but you know, it is what it is. Can't change it. And then on the 24th, I just decided to forget anyway. So it wouldn't have mattered anyway. I would have kept, I would have ruined my own streak. So nonetheless, we did pretty good last month. We invested, I think there was 21 or 22 days to invest last month. We did, 2 less than that. So in total down here at the bottom, actually, let me go back up to the top one. So we had $3,267.35 invested for the month. Our total cash deployed for the first quarter of 2026 sits at $9,881.41. The average cash deployed is $3,293.80. Our average daily cash deployed, because I'm a nerd and I like to break things down as much as possible, is $55.83. And our projected cash deployed, based on all these numbers, is sitting just under $40,000, $39,525.64. And over here on the right, the yellow boxes, you can see we're at 59 out of 61 days, or we've invested 97% of the time the market's been open this year. So, that's not 100%. It's not 99% like we were last year, but whatever. It's better than no percent I'm investing, so we'll take it, whatever. So on the next one, we move to our March activity and our overall patty. So you guys are going to see the March activity first, so let's talk about that one. So this little chart, it's by far not my fanciest looking chart, but it just shows all the tickers from every account that we have. You guys can see sum of quantity. That's how many shares we bought this month of those things. Sum of amount shows, I feel like that has to be easier to say. Sum of amount shows the amount of money we put into each of those. And then average price is kind of irrelevant. I mean, on a stock by stock basis, I guess you can see, oh, well, my average in, AbbVie is $217 a share. You'll have to check where it is now or whatever. I don't know. But especially at the bottom, when you get to the grand totals, the average is really pointless down there. But anyway, so annual dividend obviously is how much that company or ETF or whatever pays per year. And then the added forward income is how much we made by buying however many shares we bought times its annual dividend. So how much forward income we added just this month from buying those stocks. So down here at the very bottom, you can see that we added 16.2161 shares, spent that $3,267.35. There's that average price I told you is kind of irrelevant. But then we added $52.96 in added forward income. So nearly $53 this month, which you like to see. I will say, 90% of that comes from T3T, which is in the wife's Roth or 401k. It's like a mutual fund or whatever they carry in there. that one pays like $11.03 a year, but it only pays in December. So it's going to be really great for December. But in the meantime, it sucks because we don't get money from it. So that's what it is. We can't change anything about that. So next, we're going to round all these numbers up, and I want to show you like where the patty was and where it sits now. So this one's nice because once again, we're only talking about this year. We have January, February, March of 2026. So you guys can see in January, the patty was sitting at $6,851.76. Then in February, we were up to $6,918.76. And now we sit at $6,990.96. So we're almost at a patty of $7,000. Now I know a bunch of other YouTubers have patties way higher than mine, right? I'm only investing for growth and outperformance of the market and long-term gains. Zero part of my portfolio is anything to do with yield at all. Like the lower the yield, the better for me right now. So $7,000 for a growth-focused portfolio, I'm okay with it. So anyway, let's move on to the next thing, which is, how many dividend payments we got, or payments, I guess, because they're not all dividends technically if you want to be weird. But so the March passive income. So we received 17 dividend payments. I'm calling them all dividends. Yell at me in the comments, I guess. 17 dividend payments. 4 of those were in the ACI portfolio. I just literally, you'll see the same shirt, just recorded that video. I'm going to try to get that posted. 4 of those were in that ACI account. I don't talk about those here because they're in that video. So go watch that one if you want to talk about those more. 5 of those were interest payments. And we received a total, because it's end of the quarter, it's March. We received 22 payments this month. Gotta love that. I don't know anybody that gets paid 22 times in a month. So we do. Anyway. Next, I want to go down these. This chart, I think it's going to be blurred for you guys, so you're not cheating and I don't spoil anything. But what I'm going to do on the sake of editing is I'm going to review each of these payments by account, and then I think that's the easiest way. Then we'll round them all up. I don't know. We'll see. See what happens in editing. Stay tuned. Anyway, so first we have the March passive income for our IBA, the retire early account. There was 4 payments received. First up is Visa on March 2nd that paid $38.46. Visa's now paid us $238.30, or 4.8% of the dividends in that account. Then you move over to March 12th, where Microsoft sent us $38.73. Microsoft's now paid $271.73, or 5.47% of the money in this account. Then we do our newest holding, which was Comfort Systems USA, or FIX. They paid us on March 17th for $16.54. In total, they just crossed the $41 mark and have paid under 1% of the total money in the account because it's a brand new holding. So then the last one to close out the month for this IBA account is UPRO, which is the triple leveraged S&P 500 fund. That one paid us $18.10. Now, if you'll look in December, that was $26.88. I didn't sell any of this one. It's a freaking ETF or fund or whatever. Those things vary in payments all the time. I guess if you want to compare apples to apples, compare this payment to, I guess it would be April 1st is when they paid last year, where it paid $12.74. So I guess we're up. So you see $12.74 to $18.10. So that's good news. So in total, UPRO now crossed the $100 mark, sitting at $100.96. And that's 2.03% of the total money paid in that account. Next account we're going to be going through looks like both the wife and I's Roths. This one has a lot of payments, so I'm going to try to go quick. So SPYG, my Roth, $16.04 on March 25th for $215.28 total. Then we go to the 26th of March, the next day, where VNQ paid me in my Roth for $95.74. In total, that one's paid $860.61. Then we stay in my Roth for March 27th for $27.91 from QQQM. That one's now crossed $200 in total payments in that account. Then we go to the wife's Roth for the same holding, QQQM. This is her newest holding. She was in SCHD. More on that here in a second. And now we're in QQQM for better growth. And of course, when I sold SCHD, it does well. So we did whatever. Anyway, so QQQM for her paid $24.03, $46.51 all time for that holding in her account. Next up is UPRO in my Roth IRA that paid $29.70 on March 31st, bringing that total to $239.58. Then we go stay in my Roth IRA for VOO, which paid me just under $148, $147.99 to be exact. That one's now paid $1,453.46 all time just in that account. And the wife also has VOO, and on March 31st, it paid her $79.23, bringing her total in her account to $665.85. Next account is my HSA, has TQQQ, which is the triple leveraged NASDAQ fund, and UPRO. First up is UPRO, paid us $12.01. And again, you'll see that it's lower than December. That's because December pays out more. So compare this to April of 2025 for the direct, like one-to-one, where we got $9.21. This one's $12.01. So we are growing there. Total for that one is $96.61 just in the HSA. And then TQQQ, also in the HSA, that one's $9.06. And that one is actually lower than April. Again, I didn't sell any, so they just decided to pay less this year, I guess, whatever. So as long as it's going up in capital gains, that's what I'm looking for. The dividends are kind of just extra, especially in this HSA. It was in lower risk stuff, and I don't use the money in the HSA anyway. So I was like, why don't I just put it in our highest risk stuff? And if it grows to a lot, that's extra. That's, cherries on top or gravy or whatever you're putting on top of whatever you're putting on top. But in the meantime, the capital is going up, even though we've had, recent drops and stuff. So in total, TQQQ has now paid $95.31 in that HSA. So what we're going to do now is we're going to total all those up. I didn't put any blocks on here, so let me read through this as I'm reading it to you guys, I guess. So it looks like we have March of 2026 finished with $605.99, which sounds really good, but it's actually 24.5% lower than quarter one of last year. We don't like that. I did do some research on that. So I'll get to that here in a second. Let me finish this one. So we finished quarter one at, $743.39, which was 23.2% lower than all of quarter one last year. Again, we don't like any of these numbers being lower, but I'm sure there's reasons for all of it. I do know the reason for why this month was significantly lower than March of last year. And like I said, I'll get that in here in a second. So looks like our total, actually, that's irrelevant. I'm not going to read the total for the year because we don't have anything in April yet. And that's the total because it's quarter one. So now, for anybody wondering why the March of 2026 was lower than 2025, I was curious on that too. I was like, oh, all of a sudden holdings paid me, right? Like what happened? So I did this little chart. I think this is helpful. If this is really confusing, I apologize in advance. But 2025 is the left side of this. You guys can see all the holdings I got. I tried to space them out based on what was paid in 2026. So you'll see like the top ticker is Visa. And then on the far right, it'll say year over year difference. So you have the far left column, 2025. The middle column, I guess, the second big column is 2026, this year's dividends in March. And then the far right column is year over year difference. That just shows you like how much more this company paid me this year if it also paid me last year kind of thing. So you guys can see Visa, you guys can see Carlisle companies, Microsoft, Kinsale, Comfort Systems, like all of those are up, right? Anytime there's a black line on the left side, the 2025 side, that's a company that paid me this year that did not pay me last year, and vice versa. Anytime there's a black spot on the right side and not on the left side, those are companies that paid me last year that did not pay me this year. So I just want to draw attention to that. Down here at the bottom of the 2025 one, you have DGRO, VMCIX. So DGRO, QQQM, IIAXX, and VOO. You'll notice all of those are in my 401k. I don't work for that company anymore, so I converted all that in my Roth IRA and then put all that in the normal holdings I have there. The wife's VMCIX, I have her in a different fund now that actually is supposed to perform a lot better. So we did lose that for that money. And then the big one, I mean, that was a big one too, but the other big one was SCHD. Like I said, we sold that. I actually forgot about that when I was doing this video. I was like, what the heck caused that drop? Yeah, we sold that. We don't have it anymore. I know it's doing well. I hope it does well for everybody that holds it, continues to hold it, decides to buy it, whatever. I have no ill will towards SCHD. It was just one of those things, like I said before, we're into hyper capital appreciation mode where we want our money to work as hard as possible. SCHD it does less of that. It does a good amount of that, and also a really good amount of paying dividends. I wanted less dividends for more growth kind of thing. And obviously that's a risk that, we took, and hopefully it works out. Maybe it doesn't, who knows, but that's what we did. So on the far right column, you can see those red fields, I guess, the red cells. Those are the ones where it's gone down. The ones that went down higher in that list are just like interest payments, because there's less cash and interest rates are lower and stuff. So I'm not worried about those. All the ones at the bottom, those are obviously the ones that we don't have anymore. So you guys can see that difference of 196.46 at the very bottom. That's the difference. That's why, like I said, I was a nerd. I wanted to find it out. I figured somebody would ask the question or want to know too. So here we go. All right, next up. Career dividends. So this is super simple. I'm not going to take a lot of time on this. This shows every individual account, the individual amount of dividends paid in those accounts, and then what percentage of our total dividends were paid in what account. So like, for example, the ACI account, obviously very small account, just started, has only paid 0.42% of the total dividends received all time. I don't drip in that account, so there's no drip on there. And then for like down here towards the bottom, like my IBA, the taxable retire early account I just showed, we're getting close to $5,000 in dividends in there. That's 31%, almost 32% of the total dividends. It's also given me almost 21 shares for free via the drip. So we like all that stuff. The grand total is we're at $15,646.45, and we've gotten over 145 shares for free from the drip. You love to see that. So next up, dividend snowballs. Really quickly, going over what this is just how quickly it takes us to get from one milestone to the next. I used to track this by $100 and $250 increments. Bad news, good news. Bad news is I had to do a lot of updates to that because I was hitting it so fast. Good news is I was hitting that so fast. So I had to bump it up to $1,000 increments and $2,500 increments. We don't have any updates of that this time because we didn't hit $16,000 for the buy 1,000s chart, and we didn't hit, what would that be, $17,500 in the buy 25 chart. So maybe it'll happen in April, maybe May, maybe June. I don't know. I would assume by June for sure for both of them, because June's another big month. So I don't know. Anyway, stay tuned. All I'm saying is you guys can see how the goal would be nice to have every single payment be quicker than the last, but that's not realistic because of like when things pay and dividend raises and all kinds of stuff. That's just really hard to do. So the goal, I've said it before, the goal is just simply to have the new number. For example, down here at the bottom on the buy 1,000 chart, the most recent milestone was in 74 days, which did happen to be quicker than the one before that. But I just want that number, the 74, to be lower than the average of that 210.5. So as long as we're always lower than the average is going to get lower, which makes it a little bit harder to beat it for next time. And we just keep trying to beat that, and we're going to be headed in the same direction, or the right direction, I should say. Same thing with the 2,500 chart. You can see we went from 191 days for that $2,500 milestone to 240. And somebody, some people might look at that and be like, oh, you're regressing, whatever. As long as that 240 was quicker than the 728, it lowers the 728. And we just try to beat the lower number, and we try to beat the lower number, and so on and so forth. So I've explained that 1,000 times, probably took too long on this anyway. But here we are. Like I said, unscripted, you get what you get. So next up, diversification. So I think I refreshed these. I'm going to say I did just for the sake of it's too late now. So diversification, you guys can see in the little pivot table on the left, the non-colorful pie chart looking one. You guys can see S&P 500 is nearly 40% of our holdings. The blue chip is the wife's change that we made, where we don't have that one holding anymore, and we have something different that should do better. The blue chip holding in her 401k that's available has had very good long-term performance, so we're going to do that. It has a little bit higher expense ratio, but like it's not like 15% or nothing. Like it's going from like point something to like point something. We're losing a decimal place or whatever. But I'm like, dude, if we're gonna get a lot better performance, I'm okay paying a little bit higher expense ratio for better performance, kind of thing. So anyway, we have 48,000 in that. Nasdaq's at 34,000. Leveraged funds, all those QQQs and UPROs and stuff like that, that's 22,000. And then you get into 5% for. Those are all the retire early accounts positions, those 5%ers. And then the 2.43 percenters that, are in there, those are the Roth IRA positions. Cash is, cash waiting to invest for April. And then you get down into the ACI stuff. So in total, we have $334,516.11 invested into the market. And the portfolio is obviously worth more than that. So like I said 1,000 times in prior videos, this is the number we can control. We just invest money over and over and over again. And sometimes the market, like in March, doesn't cooperate. We lose a little bit of money. You only technically lose money if you sell. So we didn't sell anything. So we didn't technically lose any money, but you only on paper lose money, when it goes down. And then once it goes up, you're looking like a genius again. So, and the pie chart that's also on the screen for you guys right now, like that's for anybody that doesn't want to look at all these numbers. And they just want to see pie. So there's that. But anyway, next up is benchmarking, how we're doing versus the market, all the things, right? So here you can see the retire early. Anyone can invest. My Roth, the HSA, the wife's Roth. This doesn't have my wife's 401k on it. I didn't feel like going through it. It's on a different website with a different brokerage, and I have to find the numbers and manually put them on there. I didn't feel like doing all that. So here's what you get. The wife's Roth IRA, just assume it performs with the market, I guess. I don't know. But for the month, you'll notice all of my stuff's red. All the market was red. The market was red. The market sucked last month. So that's really unfortunate. You'll also notice, because I have those triple leverage funds in my HSA did really bad, like 15.68% in a month. Yuck. That's not good, but it's triple leverage. So when the S&P 500 rebounds, I'm doing 3 times better than a rebound. So it's worked out well for me long term. If you look at this, like look at the 3-year chart, or even the 1-year chart's even better, because last year was really good. Over the last 1 year, and at my HSA, I'm up 36% versus the market. The highest ones, the NASDAQ, up 25%. So it works out. It just looks like a really bad decision when the market's going down. I add money into, like, I have cash sitting in that account, and when stuff like this happens, I try to do like little investments to help lower my cost basis a little bit, but it is what it is. Like I said, it's just extra, money I had because it was tax advantage kind of thing. So overall, year to date, the one thing I'm happy about, I guess, is the retire early account's actually in the green. I think that's in large part due to Comfort Systems USA, FIX. That thing always kills it. I don't think it goes down. And like I've seen it go down 3% one day and the next day it's up 6%. So, that is what it is kind of thing. You guys can Google it and check it out or whatever. But FIX, amazing stock. I talked about it a bunch in the top 5 series that I did that, some people liked. So there's that one. Yeah, we're doing really well in that retire early account. The other ones are down because everything's down. Here's a little, I had to cut the snippet. So you guys will see like red bars with the balance and like return and stuff like that. I had to cut off the red bar because I had to try to fit it on one slide. So balance says $414,062.99. You guys can see, I don't know how the balance is different. See, look, this is what I'm confused about. Balance is down 21,000 or 7.27%, but the return's down 26,000. I don't know how those are different numbers, but anyway, this says return was negative 9.36%. The reason I grabbed that screenshot wasn't to make this complicated like I just did, but instead it kind of is supposed to combine all of the month's performance from all the accounts that I track into one. So like the one that I showed above, or if it's still on the screen or whatever, is each individual portfolio and how it did this month. The return, this one with the red bar on it and the green bar, is showing if you combine all those accounts, we were down 9.36% over the past month. I don't know if that's helpful or not. If it's not, let me know down in the comments like, hey, Troy, that was confusing. Let me know which part was confusing because I'm sure other parts were confusing. But let me know that this part was confusing and I can get rid of that. We won't do it next month. But if nobody says nothing, it's staying in there. So take that. But lastly, but not leastly, let's show the net worth. So I put these charts on here all the time, this average net worth by age approximate thing, and then this net worth by age. These things are different. It tells you like what percentile and then like what the actual specific average is for the two charts. You guys can find your own number in there with your own age and see where you quote unquote should be. I don't know if you're shooting for average because average typically sucks. So maybe don't shoot for average. Maybe these are the numbers. These are like your floors. Try to be higher than these. So anyway, you guys can see these numbers. I just put these on here every video because it's a nice reference point. You guys can, follow along kind of thing. So bad news, good news. Good news is I updated my net worth. Bad news is it went down again. Like I said, the market sucked this month. So that kind of is what it is. So you guys can see left side, the blue side, it says assets. We're at $783,331.73 in assets. Liabilities, we're at $86,630.93. Real estate loans obviously went down. That's our mortgage. We pay, interest for most of it and then the rest of the principal. Credit card debt, don't read into that. I'm not, the wheels aren't falling off over here. The credit card, like sometimes I have it paid off right before the end of the month. And you guys see a zero there, but it just comes out of my checking account. I try to pay that every Friday. We've never paid interest on credit cards, so it is what it is. I just put it in there. I could have just subtracted it from the checking account and put zero for credit card debt to make it look better, but I'm transparent. So that's what it is. Total net worth sits at $696,701.34, which you guys can see on that net worth readings on the far right. You guys can see that we were at 698 when I first did it, 722 in February. I thought we were, going to be millionaires by the end of the year. Not really, but, figuratively. And then March went down $9,000. And here we are, April 1st, went down another $16,000. So not good. Again, I'm not freaking out. Obviously, it sucks. I don't like it, but I'm not freaking out about it because there's nothing I can do about it. Like, we're still paying off our things. We're still avoiding debt. We're still investing. It's just the investments went down so much. It is what it is, Can't do nothing about it, so we just keep moving on. This was one of the first videos I've done unscripted. It's going to be longer than the other ones because I talk a lot. I apologize for that in advance. If you guys have any questions, comments, concerns, anything that you liked about the video, anything you hated about the video, you guys can let me know, what you thought of it. Tell me I talk too much. I know I'll try to talk less next time, but no promises. So anyway, there's going to be a video on the screen of something that you guys should probably watch, I guess. But until next time, see you.